You know, Scott, not really. Melissa alluded to the fact that we were negative on the stock earlier in the year, and that was when the stock was in the 40s. It came down to the 30s and even the 20s. Where we sit right now, the quarter was good. I think people were really encouraged by the revenue growth and the profitability, but there are still some cleanup issues related to MAUs. DAUs, as much as they went up 9%, were the lowest that they've been in some time. And we still think there are some outstanding questions related to the name here.
The street seems to be giving Twitter the benefit of the doubt, though, that they're doing the right thing, whether it's purging fake accounts, sacrificing users, if you will, to do the greater good to make the service better. Why aren't you willing to give that company the benefit?
Yeah, so I think that's a fair point, right? The benefit of the doubt. And I think they're entitled to it on some level, given that, you know, when you hear the CFO earlier talk about health being a priority for the company in terms of, you know, culling users that shouldn't be on the platform, I think that's constructive. But I think when you look at where the company is and their opportunity to grow over the longer term, we definitely see some issues there. And honestly, we think the stock is just fully valued here. It is not as compelling as some other names that we see in the market.
I mean, Facebook, for one, you've got a buy rating on Facebook. Why do you give Facebook more of the benefit of the doubt than a Twitter when it seems like the potential troubles that Facebook has and the costs associated with those troubles is really unquantifiable for all intents and purposes? Yeah,
Melissa, I think that's a good point. I think a lot of it really can be answered in one word, and that's valuation. Facebook right now is essentially trading at a market multiple, and we think a lot of bad news is already in the stock. So if they can deliver anything above, you know, what I think are pretty muted expectations, I think that the stock has the opportunity to materially increase right here. Keep in mind, this was, I mean, a quarter ago, a stock that was well over $200. Now it's under $150. The earnings outlook, sure, it isn't as great as it was, but it's still pretty solid, and we like the risk reward here going into results.
Not much love for Microsoft. It was a great report. Why not?
Yeah, you're right. It was a great report, Scott. If you look at the continuing revenue growth acceleration or the beat on EPS, this is a really strong set of results from the company. But from a valuation perspective, it just does not look compelling to us right now. I think it trades at kind of a mid-20s multiple. You're looking at, I think, normalized revenue growth probably in the low teens. To us, it's a great company and they're executing well, but the stock just isn't compelling at this point.
How long have you had a hold on it?
Too long, Scott. That's what I can tell you. This is one name that
in other words,
really
you missed
missed.
it.
We did, and you know those things are going to happen.